To keep you updated on the capital and financial markets, here is a recap of what happened.
Total assets under management at the world's largest 500 asset managers reached $140 trillion at the end of 2024, surpassing the previous record of $131 trillion set in 2021. This is according to a study from the Thinking Ahead Institute, which found that the recovery was driven mostly by North American asset managers, which saw 13% year-on-year growth. Assets from the rest of the world category, which includes China, India, and Brazil, also saw assets rise 7.7% year-over-year. Managers from Europe saw a slight increase of 3.9%, but managers in Japan saw a 9.5% decline. India is opening up its financial markets to millions of small-time investors with the introduction of micro-mutual fund plans, which start from just $3 a month. Mutual funds pool money from multiple investors to invest in a diversified portfolio of securities such as stocks, bonds, and other assets. But some experts cautioned against exposing low-income savers to the volatility of the stock market, especially in a country where financial literacy remains low. Low levels of financial awareness mean it will take time and effort for these micro-investment plans to gain traction among the masses, they noted. Crypto tokens linked to mainstream financial assets could create new risks for investors, the global securities regulator IOSCO said in a report on the 11th of November, as the finance industry remains split on the merits of tokenization. Tokenization, the process of creating blockchain-based tokens linked to real-world assets such as stocks or bonds, has seen a revival of interest among crypto enthusiasts this year, with new tokenized products being sold to the public via online brokers. IOSCO, a body whose members are the regulators responsible for almost all of the world's securities markets, said that the majority of the risks around tokenization come under pre-existing frameworks, but that there could be new risks and vulnerabilities stemming from the underlying technology. Malaysia's securities regulator is expected to revise its fee structure for the first time in its 32-year history on the 1st of January. The Finance Ministry announced the date in a statement on November 12 posted on the Malaysian Parliament's website. Securities Commission Malaysia has not changed its fee structure since it was established in 1993. It proposed the revision in March this year. Dato' Mohamed Fariz Azmi, executive chairman of the regulator, said at the time that it was mainly to cover costs and retain talent. According to the ministry, it was based on the principle of balance and fairness, noting that the SC only imposes fees on market institutions and participants, which are the ones that directly benefit from its regulatory and development efforts, and that the majority of them have strong financial capacity. Mutual fund ownership among U.S. households has grown steadily over the past 2 decades, with middle-income families accounting for much of the increase, according to new research from the Investment Company Institute. The ICI's annual survey found that 57% of middle-income households owned mutual funds in 2025, up from 43% in 2005. The largest gains were seen in the second income quintile, reflecting a broadening of mutual fund participation beyond higher income groups. Rising mutual fund ownership among middle-income households demonstrates the important role these investments play in the growing strength of the American middle class, Sarah Holden, ICI Senior Director of Retirement and Investor Research, said in a statement. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry. FIMM is pleased to announce the release of its latest annual report, now available on its official website. Link in the description.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.